Well, good morning, everyone. It's Friday, it's March 20th, and as I always say, let's get into it. S&P 500 futures were set to open up about 1.23, not too much. It looks like volatility's heading a little lower. Now, what's interesting about this is we're not bouncing the way a lot of traders thought we would. And folks, I don't think we're going to have a strong bounce. I think we're going to stick around this level. We're going to have a wait and see approach. We may have a little lower volatility, which is not the best thing in the world. Now, typically when you have volatility like this, historic volatility, which is about this volatility right here that I'm pointing to, it's about 10 times higher than the volatility we had around here, around mid-year last year or end of year last year. So the average volatility on the SPY, the S&P ETF, was $2 a day. That was the average fluctuation. Now the average fluctuation, let me actually show you the SPY so we can be talking apples and apples. This is the SPY. It's currently at 240. This tracks the S&P 500. As you could see here, it's been selling off like crazy. And if you look at this volatility, this trading range, it's between $2 and $3. If you look at this trading range, it's between $8 and $10. All right. It's between $18 and $20, not $8 and $10, $18 and $20. So you're talking $2, $3 here. You're talking $18 and $20 here. On average, it's about 10 times higher. Now, a lot of traders believed we were going to go bounce higher up here to the 200-day moving average. It doesn't appear to be the case because this coronavirus is not a one-time fix. If tomorrow or today we found out a cure, if President Trump went online right now and said, folks, we're going to have a cure to this coronavirus, go to this place, get a shot, and it's done, the market may see a big bounce, but that's not what's in store. We're only now trying to find a cure for it. We're only now trying to find support for it. We're only now getting news of more and more infections. So the way it's looking, it's only beginning to progress in the US. It's kind of like we are right now where Italy was a month ago. Okay? Now, hopefully, because we have notice and because we're doing all of this preventive measures, so to speak, hopefully it's not too late. Testing's about to begin aggressively in most states. Things are getting better. But the bottom line is, I think the price action is going to stay around here or stay around the 260 to the 240 level for at least a few sessions till we get a bearing on the issue. Now, I mean, just look at this. Look at the news. European markets were up as much as 4%. Shanghai, Hong Kong, and Asia markets advanced. Seoul surged 7.4%. So the volatility is there, but there's not a lot of directional bias right now. I got a hair in my eye. Sorry about that. All right. Investors were encouraged after seeing more steps by the Federal Reserve and other central banks and governments to support credit markets and the economy. But that's already priced into the market. That's the problem. Wall Street futures benchmark rose 2% and Dow Jones gained 2.4%. On Thursday, the central bank, this is what we were talking about in terms of steps by Federal Reserve and central banks. On Thursday, European Central Bank launched a program to inject money into credit markets by purchasing up to 750 billion euros in bonds. The Bank of England cut its key interest rates to a record low of 0.1% and restarted its own program of money injections into the financial markets. Australia's bank cut its benchmark lending to 0.25%, and central banks in Taiwan, Indonesia, and Philippines also cut rates. And this is what our Fed was doing when they were talking earlier in the week, actually late last week, about lowering rates and hopefully seeing other global markets follow through. That is happening. Now, so far, more than 10,000 people have died, more than 244,000 cases worldwide, including 85,000 people who've recovered. So you've got 244 cases, 85,000 people that's recovered. That's not looking that bad. The swings in the market have been crazy. We saw a 12% swing in volatility, and I've been getting a few questions, and I'm going to answer them for you right now. These are important questions, and I've got good answers for you. The question is, why is the bond market going down? Why is the bond market going down when stocks are going down? They should be going inverse. Well, that was the case during that initial spike. But what happened is, remember the Fed said their liquidity, they're going to flood the market with liquidity. They're going to be buying bonds. Well, what happens when you have more liquidity? it causes less volatility in price movement, okay? Think about that. Everybody's putting support into the bond market. When you have so much liquidity flooding the bond market, so much money coming into the bond market, it's what happens when you have an asset that doesn't have a lot of liquidity? It's got sharp, stagnant moves, right? But what happens when bonds? What happens when bonds or any other asset when you flood it with liquidity? Price doesn't get extremes anymore. And everyone knows if we're flooding the market if we're flooding the bond market, interest rates are going to stay steady for a while. And if interest rates are going to be staying steady for a while, there's really no reason to go into bonds. And what you're seeing investors do right now is actually, let me show you where they're putting their money right now. Let me show you this. Investors, global investors are saying, you know what? Bonds are great. They're really, really great. But right now, for the foreseeable future, we're going to put our money into the US dollar. Investors are too scared to put their money into the bond market. They want their money in cash. They want it in the US dollar. You see, we're going through a weakness right now. But if you look at the rest of the world, they're looking to America for guidance, and they think the America is where they want to be. That's where the money is flowing into right now. So we're not seeing money flow into the bond market. We're actually seeing the money flow into the US dollar, which is actually not the worst case scenario. Now, gold. I've also been asked, why isn't gold rallying? Why is gold going down? Well, there's several reasons. Number one, folks, remember, this is a pandemic. That means jewelry stores are not going to be open for the foreseeable future. Remember, we have restrictions. People can't buy gold. People don't have money to buy jewelry. So jewelry stores, places that retail gold, aren't going to be doing well for the foreseeable future. That's number one. Number two, and this is another big factor that a lot of people are not talking about right now, is investors are just not comfy with gold. They don't think gold's been giving them the bang for the buck. And here is a little tidbit. Gold is near all-time highs. A lot of traders are taking the money that they've used to make money in gold, and they're using it to bail out their cash position in the equity market. Margin calls, folks, margin calls. A lot of people are not talking about margin calls. I've already heard news that 3 major hedge funds went belly up. There's a lot of margin calls in the market, and a lot of traders are taking money from the gold market and turning it into cash, turning it into the US dollar, as you could see right here, or meeting margin calls. So one of the reasons why you're not seeing money come into the bond market or the gold market is because investors are putting their money into the US dollar market. And that's telling me we're going to have more volatility in commodities, futures, and currencies. Oh, every time I say currencies, I think about jump trade. I love jump trade right now. I love it. And we'll get into that in a second too. So do you understand, folks, why people are not putting their money into gold and bonds? They're putting their money into the greenback, the US dollar. They're putting their money into the dollar. They don't have enough confidence in the gold market, and there's too much liquidity flooding the bond market. Margin calls in terms of gold, they're hitting people with margin calls on the equity side. Traders are taking money from the gold and the bond market, and they're putting it into the equity market to meet their calls. Also, again, traders are not putting their money into gold because of the US dollar. A lot of money is moving into the US dollar right now. Now, it's Friday, and Friday, I always give you my top stocks. Let's go to my top. This is the top S&P short-term 500 stocks. Let me give you the best ones. Remember last week? These are the same ones. Nothing changed. Folks, this is one of the reasons why I like to use this scan. A lot of traders think, oh, he's going to get this stock this day, this stock this day, this stock that day. But you know what? They don't change that often. The strongest stocks tend to be the strongest stocks, and the most lagging stocks tend to be the most lagging stocks. Remember we talked about Regeneron Pharmaceuticals? This is the company that may have the first cure for this virus. May. At least the stock is behaving like it. Remember Kroger, the supermarket? People are buying up everything possible in the markets right now. Remember Clorox bleach? Remember Clorox bleach? It was the top winner last week. Again, Citrix, Lilly, Smuckers, Walmart. This is where you want to be right now. And again, folks, I want you to think about something. Just because stocks are cheap right now doesn't mean you're getting a bargain. There may be cheap for a reason. We got to get more economic news. We're not seeing that bounce from the market that we're expecting, and traders are starting to focus on other assets, which is not the worst idea either. Now, folks, thank God it's Friday. Thank God it's Friday. We've made it through the week. And it felt like a long one, right? I mean, I probably aged 10 years this week. Now, volatility is at historic highs right now. Markets are deep into a bear market. Now, I want to point out something to you, especially a strategy that's working best right now. Without a doubt, one of the best performing strategies has been one that I've mentioned to you for a while, including just a few minutes ago. This strategy does not trade stocks. It has no correlation to the stock market, only the volatility, the good stuff. Instead, it focuses on gold and currencies, which are completely uncorrelated with the stock market. I warned you this would happen, and I tell you every time when things like this happen, you want to stay away from the stock market. You want uncorrelated assets. Now, what am I talking? I'm talking about jump trades. That's right, jump trades. I encourage you to click below, get all the details. Guess what? Our current position is up 103%. One trade is up 276% out of the cluster. And another up 383%. I'm not kidding. Follow the link below, learn about jump trades. Remember, what do I always tell you? There's many ways to skin a cat. The stock market's great, but when it drops 1,000, 2,000 points a day, you want to diversify. Either you want to add jump trades to your portfolio, or you want to trade jump trades without the stock market. Jump trades allows you to do that. It's got currencies, it's got gold, folks. And you could trade this just like any other stock. If you could trade Tesla, if you could trade Applied Material, if you could trade Lilly, if you could trade Costco, if you could trade Netflix, if you could trade Amazon, you could trade this. You could trade this with any stock broker. These are exchange traded funds. They trade just like stocks. You don't need to know about futures. You don't need to know about currencies. You don't need to go to your local jewelry store to buy cash gold. None of that stuff. Folks, 103% in just a few sessions. One trade is up 276%. Another one's up 383%. Limited risk, IRA friendly. Take advantage of this volatility now. This is one of our best performers. It's solid and it doesn't correlate with the stock market. As a matter of fact, the more volatility and the more ruckus we have in the stock market, the better this strategy will perform. That's how I designed it. Folks, you have a wonderful weekend. Get some rest. Forget about the markets for just a little bit, at least the stock market, but focus on jump trades. Jump trades is your ticket out of this mess right now. Folks, I'll talk to you soon. Follow the link below. Get the next trade. Do it now. Don't delay. I've been right on the dot my pulse has been 100% accurate on this whole drop. Folks, get in on this now. Don't delay. Have a good weekend. Bye.